Welcome to the library this evening. We are delighted to have Ben McLintock here with us tonight. Ben is a Senior Vice President and Wealth Trust Advisor for Arvest Wealth Management. He joined Arvest in 2014 after nearly 10 years as a charitable gift planning executive and 2.5 years working with a local law firm. Tonight, Ben will walk us through the process of getting tax-exempt status for a nonprofit. With that, I'm going to turn things over to Ben. Thank you for being here.
Well, thank you, Renee. Hey, wow, applause. All right, wow. Appreciate it. Well, thank you all for being here, and for everybody that's joining us on the live stream, we appreciate you tuning in for our discussion today. We'll get right into it here in a second, but as Renee mentioned, prior to working for the bank and doing that now for 10 years, prior to that I actually worked in charitable gift planning for a local charity here in Northwest Arkansas, Economic Opportunity Agency of Washington County Incorporated. They operate all of the Head Start centers in Washington County, and I primarily was doing fundraising for an organization called EOA Children's House that provides long-term therapeutic rehabilitative services and educational pre-K services for children who are being abused and neglected. So that was really my introduction to the nonprofit sector, and everything about it just is absolutely fascinating to me, and anybody that wants to know about how to do this the right way, I really enjoy talking about it. So we'll get right into it, and I know that the people that are tuning in can't submit questions, but if anybody here in the room has any questions as we're going through this, please feel free to stop me, throw something at me, and we'll cover any questions, and then we'll have time for questions at the end of the presentation as well. So as far as our goals that we've got that we want to try and cover today, being clear on your purpose of why are you wanting to create a non-for-profit in the first place. They're there for a lot of different reasons, but we want to make sure that you are being very clear as to the answering the why, because that is one of the first things that you'll be asked once you have started a charitable organization is, what are you doing? Why are you doing this? Also, what type of not-for-profit do you want to be? Also forming a board of directors, the first inaugural governing board for that particular organization. Writing, or at least identifying what is the framework that you want to have for the articles of incorporation and the bylaws for your charitable organization. Filing the incorporation paperwork with the state government, because that is a state level function. And then also making sure that you are able to qualify and filing for and getting granted tax exempt status by the IRS. That's something that happens at the federal level. Two separate functions. We'll get into both of them here during the course of our discussion. And then, of course, ongoing compliance so that you maintain your state level status as a corporation and also maintaining your federal tax exempt status with the United States government, and how that flows down obviously to state level as well. Important disclaimer for all of my good compliance folks back at the bank. Nothing in this presentation can be construed as legal advice or tax advice. I myself am a licensed attorney in the state of Arkansas. I didn't get enough mental abuse the first go around, apparently, went back for seconds and got my tax law degree, so I am a tax attorney, but I am not a CPA, so I can't give tax advice, and being a bank employee, I can't even give legal advice. But that being said, anytime you're doing this kind of work, particularly on the front end, hire an attorney that has experience with incorporating and organizing these types of charitable organizations, because doing it right on right out the gate is going to save you from having to deal with headaches and problems potentially down the road if you skip some steps and potentially leave yourself open to either tax problems, legal problems, or things of that nature. And anything that we talk about as far as scenarios are concerned, that's just all hypothetical, just for the purposes of this, not any specific advice that I may be giving, and everything that you may be doing, it's going to be unique to you. And so you need to make sure that you're engaging qualified professionals to assist you with that process. So what exactly is a not-for-profit corporation? And I mean, you all can read, so I'm not going to sit here and read everything here verbatim, but it is essentially, it's a corporation. I mean, Walmart, Tyson Foods, J.B. Hunt, I mean, those are all corporations, but they are for-profit corporations. We're talking about a not-for-profit corporation. that has been granted tax-exempt status by the IRS and your state's taxing authority, so that the corporation itself is not legally responsible, just like those 3 companies I just mentioned. They all have to pay taxes. We as individuals all have to pay taxes. Not-for-profits that have been granted tax-exempt status by the IRS do not have to pay income taxes. They do have to pay other types of taxes, for example, property taxes, sales taxes. They are not exempt from those, but they are exempt from things like capital gains taxes and also income taxes at the state and the federal level. Non-for-profits are formed for lots of different purposes, including sometimes making a profit. Now you're maybe thinking to yourself, hang on a second, why in the world would a non-for-profit be something that is going to be earning a profit? And give us some examples. Well, here are 3 right now. Go Hogs. Anyone like football? And a lot of healthcare corporations, Mercy, Washington Regional Medical Center, they're not-for-profits, but they don't offer their services for free. They charge for those things. And for example, for the Razorback sports program, depending on how well they're doing, they can earn a lot of money. So that is not something that is that non-for-profits are restricted from being able to do. You can charge for services. You can even make money with an asterisk behind that, which means that as long as those profits are used to support the not-for-profit activities of that organization, you're good. If you use them for other types of purposes, that's when you can start running into fraud. Fraud is bad, and that's where your tax-exempt status can be revoked, or you can also the corporation gets dissolved entirely, and which is also not a good thing, obviously. This is another important thing. Companies, again, the ones I mentioned earlier, Walmart, J.B. Hunt, Tyson Foods, any publicly traded company, even privately held companies. Any of you are familiar with George's Inc., George's Chicken. That is a privately held company. It's not publicly traded on the New York Stock Exchange or anything like that, but there are still shares of that company. The people that own those shares get stock that goes up and down in value. They can get dividends. They get income off of that stock potentially. That doesn't happen, obviously, with a not-for-profit corporation. The people on the board, the officers, the members of that organization cannot receive what we call in the legal world pecuniary value. You cannot receive any sort of monetary involvement or benefit from being involved at that level with those organizations. Now, when I say officers, I'm talking not about like the chief executive officer or chief operations officer or something like that. I'm talking about an officer on the board. And no one can actually own stock in any of these companies, for example. The only exception, obviously, is that people that, I myself, when I worked for EOA, I love the mission of Children's House. I love the mission that the EOA stands for. I also need food to keep the roof over my head and food on the table and keep my kids fed and clothed to go to school. And so those companies obviously have to pay staff in many cases. Maybe not necessarily when things are getting off the ground, but eventually having paid staff is a way to be able to attract talent to further and advance that organization's mission. And so reasonable compensation is an exception to that, where you can receive monetary benefit if you are an employee that's actually doing something to further advance the organization in some way, shape, or form. So why in the world would you go through all of this rigmarole? Why would you make the effort of doing this? First and foremost, there's this legal doctrine in the legal world called limited liability. And what that means is that if you're just out there doing good in the world, you're trying to help people, and you say you want to go out and you want to help alleviate hunger, or you want to help with addressing the homelessness issue in this community or in another community. And to address that, maybe you're handing out food on the street corner, where you see the people that you typically are having food insecurity issues typically hang out, and you're passing out food. What if you're doing that and one of those people, that food was improperly prepared and somebody gets sick, ends up in the hospital? If you're just doing that as an individual, you are personally on the hook legally for any injuries or damages that you have caused to that person. Say you were trying to address the homeless issue. You build a house. You say, you know what? I'm going to let people live in this house for free. House catches on fire and burns down. Somebody dies. Somebody gets injured. It was your house. You built it. You let them live there. You're on the hook. So when you have a corporation, a not-for-profit corporation, the acts, the well-intentioned acts, anything that doesn't qualify as what we call in the legal world gross negligence, is going to be protected, and those individuals that may be injured or damaged as a result of acts of the corporation, they may be carried out. Obviously, corporations can't do things. People have to do things on behalf of the corporation, obviously. But those individual people acting in their capacity as an employee of that organization are not personally liable for the good faith acts that they are doing out in the community. They can sue the corporation, they can't sue the individual. So that's one reason why you would want to do that, because if you're handing out food, somebody gets sick, they sue the company, they don't sue you. Your personal assets are not on the line for doing something that somebody thinks that they have a claim against you. Also, perpetual existence and credibility. I mean, it's having that level of formality of, I'm not just handing out food on the street corner trying to help people. We have an organization and we have a structure upon how we are going to go out and try to address hunger or address homelessness. Again, I'm just picking those out of thin air as an example. That lends credibility and the greater likelihood that other people are going to want to join your cause. And then also perpetual existence in that, I mean, if somebody passes away and they had a cause that they were passionate about, but they were the only ones that were doing it, odds are that effort is going to die with them. Whereas organizations, for example, I mean, the founders of the Red Cross, they've been gone for a long, long time. The Red Cross is still here, and it's still doing a lot of good stuff in the community and around the globe. So that's the other benefit of doing that. And obviously, going back to the tax benefits, being granted that tax-exempt status by the IRS affords you some benefits, because then once you've done that, if somebody makes a gift to your organization of some kind, donates cash, donates some other form of property that organization can then sell and then use that cash to advance its mission. Those are things that if you don't have tax-exempt status, they can give you a gift, but they're not going to get a tax deduction for it. But if the organization has tax-exempt status, they will get that deduction for making that gift to your organization. Now, the bottom line, having done charitable gift planning now for 20 years, I can tell you right now, the number one reason why people make gifts to charity, it's not taxes. It's because they believe in the organization and their mission. They like the tax benefit too. They're not going to complain about getting it, but that's not the primary driver of why they do it. And so going back to what is your organization's mission? What are the social issues that you're trying to address? Being very, very clear about what that is and what you want to be trying to address in the community is very, very important. For not only for the purposes of being able to make sure that you stay focused on that mission, you don't get what we call mission drift, but you also being able to communicate that to the public in a compelling argument to try and gain their support. And so this is one thing I cannot stress enough. Make sure you're not duplicating that somebody else is already doing. Please, for the love of God, don't reinvent the wheel. I have seen so many times where people will have something they want to do, and it's a great mission, but it is so close and so similar to what other people are doing that it dilutes the effort of what everybody's trying to do, and you also end up with brand confusion. I mean, when I worked for EOA Children's House, people got us confused with the Children's Shelter and the Children's Safety Center all the time. Three very distinct missions, serving three very distinct functions. Those organizations team together all the time, but amongst the general population, everyone thought that we all did the same thing. And so understanding how you communicate that and what that mission is very, very important. It's going to help motivate your staff. It's going to help make sure that, again, people stay focused on what it is that you're trying to accomplish here and not get mission drift. And then again, also for getting people behind you what you're trying to do. Next step, obviously, is going to be figuring out what are you going to call your baby? What is this organization going to be called? What is its name? And doing a search on the Secretary of State website is going to be step number one. Because again, this is where we run into intellectual property issues. we don't want to be stepping on somebody else's toes. You don't want to be going on somebody else's turf. So you want to make sure that whatever name you pick is something that is original to your specific organization and not something else, and not something that is substantially similar that is going to create that confusion amongst the general public. These are the types of organizations, as far as what their purposes that they're trying to accomplish, that qualify as a not-for-profit. Anything that's charitable, again, poverty relief, general public health, discrimination, homelessness, the thing, I mean, you name it, it's pretty self-explanatory. Religious organizations, educational purposes, testing for public safety, youth amateur sports competition. I mean, that's where, for example, that's where the Olympics are. I mean, the U.S. Gymnastics and the U.S. Olympic Committee, those are all not-for-profit organizations. Going back to, they make money, but they are still not-for-profits. But that's why, for example, Olympic athletes, they can't get a salary, they can't get endorsements while they're actually competing, because they are classified as amateur athletes, which, how do you take somebody at the pinnacle of that particular sport and call them an amateur? I have no idea, but whatever. And so anyway, those are the different categories that you can, if you fall into one of those categories, then you qualify for being able to hit that threshold, that checking that first box of qualifying as a not-for-profit. Next step is going to be talking about forming your board of directors. The board of directors, for those of you who aren't familiar with that type of a body or governing body, and what they do is they really serve as the governing agency of the corporation. They are the ones that are ultimately responsible for making sure that that company stays fiscally on track and also stays mission and policy-wise, internal policy-wise, and legally stays on track with what it is that they are trying to do. Recruiting the right people to serve on that board is essential. I worked with a board when I worked for EOA. I've worked with a number of different boards over the years when I have served in an advisory capacity, advising clients who are not-for-profits. I actually currently serve on the Arkansas Community Foundation's board of directors for the Fayetteville affiliate. And I've done that for the last 3 years, and we started my fourth year this upcoming summer. But making sure you have the right mix of people is really, really important. And the mix is going to depend on the type of not-for-profit. I mean, for example, if you're going to be doing something where you're going to be addressing cruelty to animals or an animal shelter or something like that, it might be good to have a couple of vets. Maybe good to have somebody who understands the pet population, the needs of the pet owning community in the area that you're trying to serve. And I think that even then, having some people that are familiar with that particular topic is important, but I think also having some degree of exposure to the broader general population and the community and what they may think of, people that are outside the proverbial fishbowl of that particular issue, can also be very helpful and provide some very helpful and important feedback as to what are the opportunities and potential potholes that you're going to have to navigate in getting that not-for-profit off of the ground. And then defining this list is very important to do before you start recruiting people. Because the last thing you want to do is have to, as a good friend and mentor told me one time when I had somebody that they became a mismatch for the group that I was working with, having to disinvite them. That can be a very awkward conversation to have with somebody. So knowing on the front end who it is that you're wanting to attract and who are you trying to recruit, what are the qualities, experience, skills, knowledge, or experience that they bring to the table is really, really important. Corporation articles and bylaws. So we're going to dive back into some of the legal stuff. And so this is any corporation, whether it be a for-profit corporation or a not-for-profit corporation, has to have what are called articles of incorporation. Those are the legal, essentially that's the birth certificate for the company. And that is what is actually filed with the Secretary of State and actually grants legal entity status, legal status and existence to that organization. And all that information, for those of you who may be frantically typing right now, what I can do is I can share this PowerPoint with the Fayetteville Public Library, and then they can share that with everybody that attends. And you'll have to share your contact with them, obviously, but they'll be able to share that with you so no one has to reinvent the wheel. I'm not a big fan of reinventing the wheel. But then once you have created and filed those articles of incorporation, that is something that I do recommend. You work with a private practice attorney who, again, specializes in drawing up articles of incorporation for not-for-profit organizations. You then file that with the Secretary of State. The process is pretty painless. I think the franchise tax for on an annual basis for that is, I think, $150. And that you have to pay, and then once you have gotten those filed, you'll also want to prepare the bylaws. Think of it this way, as the articles of incorporation are the framework of the house, but you've just got bare walls. I mean, not even walls. You've got wall studs, no plumbing, no wiring, no drywall, no light fixtures, no nothing, no light switches. That's what the bylaws are. That fleshes out the house and really gives you the framework of how do you bring on people? How do you bring people onto the board? How do you hire people? What is the more detailed mission statement for the organization? What is the scope of what you want to do? Because in the articles of incorporation, it will say something very vague in general, like this organization has the authority to do anything that will, in the course of business, that would not violate its not-for-profit status. That's nice and specific, isn't it? So you're going to want something more specific, and that's what's going to be in the bylaws. And also the process for electing officers, directors, the fiscal controls and procedures, all of that is going to be the stuff. And that's why you hire the attorney, the private practice attorney. They're going to know what needs to go in there for that specific organization and that specific type of organization. And then when you have that first organizational meeting, that's when you have the board formalities. Typically boards, I mean, the board that I'm on right now for the Community Foundation, it meets every other month. Some boards meet every month, some meet quarterly, some meet semi-annually. You are legally required at minimum to have the annual meeting. If you do not have an annual meeting, you are jeopardizing the legal entity status of the corporation. But then after you've done that, this is the steps that you're going to have to go through, and these are just called board formalities that you have to go through, and making sure that you're following all those steps to keep that legal status above board for the organization. Approving the bylaws, appointing who's going to be the board president, who's going to be the treasurer, the secretary, and all that other good stuff. Setting an accounting period and tax year. This, why wouldn't you just do January through December? Well, that may work just fine. I know that, for example, the organization that I worked for, EOA, they picked the same fiscal year as the United States government. Why would they do that? They got a lot of federal grants. So it made sense from a financial standpoint to have their fiscal year tied to the fiscal year of their primary financial support source for the bulk of the programs that they offered. Children's House was a little bit different because almost all of their funding was exclusively private funding when I was involved with them. But making sure that it's synced up with other types of grant funding, I think is a handy thing for people to keep in mind. Approving any initial transactions of the corporation, opening up corporate bank accounts, who has the legal authority to sign on those bank accounts. Typically, it's going to be the board president, treasurer, and then if there are any fiscal officers at the employee level of the organization, which typically when you're starting out, it's just going to be your board. But once the organization grows to a point that it reaches that critical mass that it has employees that are paid, typically the chief financial officer and the executive director / CEO are typically the people that are authorized to sign on those bank accounts, is what we see in most cases. And then obviously everything needs to be stored in a safe place. This isn't stuff that you stuff in the back of your dresser drawer. These are important documents that you need to make sure are preserved and protected correctly. And then once you do all of this, just like all of us have social security numbers, corporations have EINs, employer identification numbers. Sometimes they're called TINs, tax ID numbers. But that's going to be the social security number that puts that corporation on the radar screen from a legal and financial standpoint for the state and also for the federal government. And you're going to have that before you open up any bank accounts anyway. So that's what you do is a form, let's see, get this right. Yeah. So a form SS4 is what you'll need to file to get that EIN. Again, most of this is done electronically. It's very straightforward. And then as far as getting tax-exempt status, so at this point, congratulations, you have a not-for-profit. You are not exempt from taxes yet, though. So that's the other thing that is really an important step. And this is the step that actually takes a little bit longer on doing all of this. The forms, again, are electronic, and this is something also I recommend having that private practice attorney that assists you with actually drafting the corporate documents. Talk with them, with he or she on the front end, and see what experience they have with getting tax-exempt status from the IRS, because this can be a process that, unfortunately, you are at the mercy of our good folks at the IRS at that point. It may take a few months. I've seen one that took 14 months, and there's no rhyme or reason to why it takes longer or not. I mean, let me put it this way. I wouldn't file for tax-exempt status right now. since it's almost April 15th. That's going to get put to the bottom of the stack. But even then, there's no real rhyme or reason as to when they actually get to it, review it, and there may be a little bit of back and forth as far as asking questions. But for the most part, though, it's going to be pretty much straightforward, and 99 times out of 100, in my experience, these get approved. And so there is a more streamlined form, a 1023EZ, for very, very small organizations, which, if you're starting something from the ground up, it probably is going to be something smaller like that. If there isn't a whole lot of cash flow, then that may be a way of being able to fast track that whole process. And then as it grows, then you are able to move forward with that. But it's either cash flow of $50,000 per year or less, or total assets less than $250,000. You donate some land, you're probably going to be over that threshold if you're here in Northwest Arkansas, if there's going to be real property involved with the mission of the organization. And then, no joke, one day a letter's just going to show up in the mail saying, congratulations, you have tax-exempt status. I mean, there's no sort of advance notice. They don't email you. That is the blessing and the curse of the IRS, is people always, sometimes I have clients, they'll come to me all freaked out, particularly this time of year, and said, the IRS texted me. The IRS doesn't text anybody. They emailed me. No, they're not going to email. I got a phone call. They do not call you on the phone. They do snail mail, and they do only snail mail. You know, if you call them, that's a different story. But as far as them reaching out to you, U.S. mail, U.S. mail, U.S. mail. That is their way of reaching the outside world. Again, you can get ask for donations. You can receive donations for your not-for-profit prior to getting that letter, but you cannot give to any of those donors that make any gifts to you any sort of tax letter or tax receipt saying your gift to us was worth X. You can file this with your taxes to get a deduction. That would be tax fraud. Tax fraud, bad. That gets you fitted for an orange jumpsuit. Personally, I don't think anyone in this room looks good in orange. So I think that making sure that you're just, again, keeping everything above board and clean as straightforward as possible, get all your ducks in a row. Do it in the right order, and it eliminates a lot of problems later. And then as far as state government filings, once you have gotten that letter, you still need to obtain your state tax exemption from the state of Arkansas and any other state that you happen to be wanting to do business in, or asking or soliciting donations from. That's something, the nice thing about that, pretty straightforward. You just take the letter you got from the IRS and say, hey, state of Arkansas, I got this from the IRS. We're good? Okay, we're good. I mean, it's pretty straightforward as far as that process. But again, same thing. They've got some detailed checklists for that. And again, this will all be part of the PowerPoint that you should have access to. Again, surprise, surprise, you have to submit everything by snail mail. This goes not to the Secretary of State, obviously, but to the State Department of Finance and Administration. And so as far as ongoing compliance is concerned, and you've now got this tax-exempt status, now you just have to keep it, which is sometimes easier said than done. There is annual reporting you have to do. Human beings file a Form 1040 or 1040EZ if you have the ability to do a straightforward tax filing. For the 1040 equivalent for a not-for-profit organization is a 990. And so this is going to include everybody who is involved on the board, if there are compensated officers that are on the board of directors who are also employees. Typically it's the top 2 to 3 highest compensated employees of the organization. They will list that person's salary, what their benefits are, and everything else. So if that's somebody is squeamish about, I don't recommend working for a not-for-profit, at least not at the top level, because people are going to know how much you make. And everything else about that organization is going to be a matter of public record. Who gave them gifts? How much were those gifts valued at? And everything is going to be a matter of public record. And this is actually something that I was educated on when I first started working for a charitable organization. Is the financial records of the organization are a matter of public record. Anybody in the public can go into an organization and say, I would like to see your books, please. And they may drown you with stacks and stacks of books, and you have to look through all of them to find whatever it is that you're looking for. But the end of the day is we have a legal right as members of the public, when a corporation is being granted this very special status, that's something that you're giving up, is that level of privacy. I'm saying, you know what, our finances are our business, thank you, have a good day. You can't do that. So that's something that is important for people to know. And this is something that's really important. Not all states have the same reporting requirements. That's a function of state law, and state law is something that varies from state to state. A lot of them are very similar, but there are going to be some minor nuances, so know the rules of the sandbox in which you intend to play is very, very important. And then tracking the state's the organization's finances and all the corporate activities. Don't go, oh, we didn't have all that, we're going to have to reconstruct it. Even the appearance of impropriety is not good. You may as well have done something inappropriate at that point. So I think that making sure that you do that is really important. Make sure that you get audits. If it's an organization that's getting started, it may not be a very complicated audit. It may be very, very simple. But I remember when I worked for an organization, it was an annual basis. We knew that on this date, for this week, on this month, the auditors were going to be there. And they were going to go through everything with a fine-tooth comb. And I remember our chief financial officer and the HR that had a support role in the finance department, that's all they did for about 2 weeks leading up to the auditors showing up. And these were auditors that we hired to do this. This isn't somebody coming in from the outside. This is the people that we brought in to make sure that our books were above board and the balance sheet everything zeroed out. And when you got to the end of the balance sheet, because that's how you keep that status. And as far as just some other things, there's some limits on what not-for-profits can do. No political campaigns, no lobbying. They may go things, so hang on a second, Ben, what are you talking about? What about PACs? Well, political action committees and super PACs and things of that nature. Fundraising, giving for political campaigns, that is a whole separate universe from what we're talking about right now. There are things that you think about, like, well, what about the NRA? I mean, they do lobbying, but they have a separate arm that is separate and apart from the tax-exempt organization that is doing that, and they have a separate bucket of funds that they receive that people don't get a deduction for because they are actively involved in lobbying Congress, whether it be or some governing body at the state or the federal level, in being able to get legislation advanced that they think advances the mission of their particular organization. But just in general, no intervention in political campaigns, no lobbying, stay away from it, and you'll be in good shape. Obviously, this should be self-explanatory, but it still has to be said. Anything that you're going to be doing that violates law or public policy, you're not going to get, if you get tax exempt status for it, it's going to get yanked pretty darn quick. Another example of this, what we have to do, I have a lot of clients that have donor advised funds that they've set up to support the charities that they like to support. One of the things that we have to do when we are actually say, I want to give money to charity XYZ, we have to go through and vet that charity and make sure, and it's just basically it's a Patriot Act check, and make sure that they are in good standing with the IRS, that they are not part of or connected to a terrorist organization, which sounds crazy, but we have to check those things to make sure that that charity is on the up and up before we make a gift to that organization. Limits on revenues from what's called unrelated business income. This is getting really hyper technical, but that's something that is just not permitted for an organization to be able to do and maintain their tax exempt status. Unrelated business income is and also something where that tax is very, very high. So this is an exception to that tax exempt status. You have unrelated business income, you're going to have to pay taxes on it. Not conserving charitable assets, aka gifts from donors. For example, if somebody makes a gift of $1 million and they wanted it to go to support kids that are getting treated for cancer and helping their families with medical bills, and you spend it on a big corporate retreat, that's going to be something that comes back to bite you hard. I think another thing that is, actually, let me just back up here a second and talk about this again, just to hit this point home. Conserving charitable assets, I would also say, having done charitable gift planning professionally for 10 years full-time as a career, and then also guiding and advising clients on that now for a total of 20 years, including my time at Arvest Wealth Management, not honoring donor intent is the kiss of death. If a donor makes a gift to you and to your organization and they say, I'm going to give you this, but I want you to use it on this and this and this. If you deviate from that, that donor will never give to you again. And who are they running with? Probably the other people that are your donors or people you'd want to be your donors. And so honoring that donative intent is extremely important. It's not part of the slide presentation tonight, but that's why I always stress to the non-for-profits that I advise and counsel, have a gift acceptance policy. So that way, if somebody makes a gift and it doesn't align with your mission, doesn't align with your goals, you have a written document that's been authorized and ratified by your board that allows you to politely, kindly, gently say to that donor, no, thank you. We appreciate it, but that doesn't align with what we do here. But we can do this over here. And so it allows you to hopefully retain that donor and not make them mad. So I think that that's something that's really important for people to keep in mind. If the organization dissolves, the assets don't have to go somewhere, and so they usually will go to another not-for-profit organization. That will usually be something that is outlined in the bylaws. It will either identify the category of charities, for example, Economic Opportunity Agency, if that were to go away for whatever reason. It is what's called a community action agency, and I remember in the corporate bylaws it said in there, if this organization were to ever cease to exist, I'm just paraphrasing here, then the assets of this company shall go to another community action agency organization. So that way, hopefully, if this organization wasn't able to continue on this mission, maybe another organization will be able to step into its shoes and continue doing that themselves. And then there's a big distinction between private foundations or private charities and public charities. The big distinction being, for example, let's take Crystal Bridges. Crystal Bridges, started by Alice Walton. She is by far the largest financial and in-kind contributor to an absolutely fantastic museum that we are very, very blessed and fortunate to have in our backyards. But there are a lot of restrictions on what private foundations and private charities can do. And so for that charity, to the Crystal Bridges, to be a classified as a public charity, at least 1/3 of its financial support or in-kind support, people donating artwork, donating land, whatever it may be, to the organization has to come from public sources, has to come from the general public. And then once you have reached that threshold, you are then able to be classified as a public charity, which has, I'm really getting into the weeds here, but this is the tax lawyer in me, I apologize. It just, the amount that people can deduct is a little bit different, and also, but mainly for the organization itself, the reporting requirements are far more forgiving if you're classified as a public charity as opposed to a private charity. And so that is the end of my my remarks for today. I wanted to leave around 20 minutes, and it's 6:40, so I hit it right on the dot. And just leave it open for if anybody has any questions, or if anybody wants me to go back over any of the slides, I'd be happy to do that now.
Can you clarify a little bit about the public-private?
Yeah.
Grant obviously makes you public, I would assume. I'm assuming you receive grants.
Yes.
That's the default.
That would be an external source. Yes.
Right.
Mhm.
And so I just 1/3, and I know that's a tax question, but I didn't see 1/3 up there, so I was just taking that up. So
yeah, I didn't put it in the slide.
No, that's okay.
Yeah, that's what's the number or the ratio that's baked into the tax code. If you receive at least 1/3 of your financial support from the general public, that is one of the check.
like
Baseline, yes,
Baseline.
yeah. Yeah, baseline. It has to be it has to be above that. If you're below that amount, then you're classified as a private charity.
Gotcha.
If you're above, at least 1/3 of your funding comes from the general public, and I can't remember off the top of my head what the criteria are for that, but it's like if you have your money coming from a single family or a small group of individuals that are all legitimately
Just
connected.
collectively
Yeah,
supporting something.
correct.
That would make you-
Yeah, but if you have a bunch of people in the city of Fayetteville that are all supporting your organization, and you also happen to be a benefactor of the Waltons and the Tyson family, but at least 1/3 of your funding comes from the general people that live in the city of Fayetteville, you're good. Yes?
What about, I want it to be a private nonprofit. I have more than 1/3 of the donations. Can I keep it as a private?
I don't know. That's a great question.
The question behind it is, I don't want to lose my ownership of this nonprofit if I start it.
Oh, I see what you're saying. Yes. So, as far as your control of the organization, that goes back to the board. That goes back to the board of directors. Because when you think of somebody making gifts to the organization, and don't think that just because somebody's making a gift, that is not the same as somebody that, I'm just going to use this as an example because they had their annual shareholder meeting today. Disney. They had a vote of no confidence from the shareholders on Bob Iger, who's the president and CEO of Walt Disney Incorporated. Donors don't get to make votes of no confidence on the organizational structure or the mission of the organization. They are making an irrevocable gift to your organization, and they have no further say or involvement on how that money gets spent. There's an ethical and moral obligation to do what they're fulfilling the mission of the organization, but they can't tell you what to do with it. So from a control standpoint, the control of the organization lies with the board. And then the board hires people to actually run the organization if it's an organization large enough to have employees, and they're the ones that are actually carrying out the day-to-day operations.
And can I be a lifelong board chair? Anyway,
No.
I don't want to lose it because I know somebody, they started something, then they were kicked out. This is my major concern.
Right. So in that kind of a situation, that's where you have to build checks and balances into the bylaws of the organization, and that's where also recruiting who is serving on your board becomes very important. If you're recruiting people that have the have the ability to do the charitable equivalent of a hostile takeover, then if you're concerned about that, that would be something to discuss with the private practice attorney to determine how do you safeguard against that inside the organization itself.
Thank you very much. I'm
Sure.
sorry.
No, you're fine. Great question. Yeah.
I was just wondering, with the 1/3, does that also include in-kind gifts, or is that just financial money gifts?
Not, it's everything.
Everything all together, it can be either or both all together.
You could get, I'm just going to use some simple math because it's after 5 o'clock for me. You get a total of $300,000 worth of gifts over the course of 2024. One check from one person, $100,000. Another check from that person's spouse for another $100,000. And then you receive an in-kind gift that's worth $300,000. I'm just going to kick an extra dollar, $300,001. But it's in-kind property. You qualify as a public charity.
Okay.
Good questions. Any others?
Can nonprofits become IPO'd?
You cannot IPO a charity. What you can do, though, however, is the charity can sell its assets or intellectual property, if it has any, patents, things of that nature, to a for-profit corporation. And almost in a way become a for-profit entity. I'll give you a couple of examples that are here in Northwest Arkansas. NARTI, Northwest Arkansas, I can't remember, it was the Radiological Cancer Service. They did all of the radiation treatments for cancer treatments here in Northwest Arkansas. They wanted to, they had an opportunity, they were approached by what is now Highlands Oncology to buy all of their radiological services. And in exchange, I think they bought it for I think it was like $17, $18 million. That became an endowment for what is now Hope Cancer Resources, because NARTI merged with Hope Inc. To become another charitable organization that still helps people that are living with and getting treated for cancer, but they no longer provide any radiological services or radiation treatment services. Another example would be Springdale Memorial Hospital. That was started by the Tyson family and the Jones family and a lot of other community leaders in Springdale many years ago. That is no longer Springdale Memorial, which was a not-for-profit. It was sold to what is now Northwest Health, which is if I remember correctly, is owned by Triad Health, is the parent company, and that's a for-profit hospital and healthcare organization. But what happened when they sold all of those facilities, they made a lot of money. That actually, it's now, I believe, called the Endeavor Foundation or the Accelerate Foundation, but it used to be the Northwest Arkansas Community Foundation. That was the seed money that got that community foundation started here in Northwest Arkansas. So that is as close to IPOing as a not-for-profit can get.
Thank you very much.
Sure.
What is the difference between a foundation and a standard not-for-profit, if that makes sense? Like a community foundation versus a community nonprofit.
Correct. I mean, it's a great question because whether it be the Accelerate Foundation or the Arkansas Community Foundation, those are not-for-profits. I mean, one of my things I still enjoy doing is going out and asking donors to establish donor-advised funds at the Arkansas Community Foundation. So they accept grants, they accept gifts, but a foundation is going to be a grant-making organization where they are going to be distributing money or resources to not-for-profits to carry out their specific missions, versus a organization like Washington Regional Medical Center. They don't, while they have a foundation, that foundation exclusively makes grants to the healthcare organization, the healthcare providing organization that is a not-for-profit. So this getting a little hyper-technical here, but the foundation will have its board of directors, and the the Foundation for the Hospital has its board of directors, and then the hospital itself has a board of directors. And there's some crossover as far as there's some liaisons serving on both, but they are two separate legal entities. And one makes grants to the other, and that's all that one does.
But they are both nonprofit.
But they are both not-for-profits, yes.
They're both nonprofit.
Yes, yeah, okay, that's what I just,
Yeah,
that's what I thought, but I wasn't sure on that.
Yeah, so I would say the purpose of a foundation is to make gifts to support the missions of charities in a region or whatever its region service territory ends up being. But then a not-for-profit is something that is actually carrying out one of those missions of a charitable purpose, religious, educational, in one of those categories where they are either providing goods and or services to the community in support of that charitable mission. It'd be the analogy of all foundations are not-for-profits, but all not-for-profits are foundations.
I was just gonna ask, if it's a much smaller organization, how many people do you suggest would be on the board? And what would you call them besides the president, the vice president, the treasurer? You know, it's a long list of things, so like,
Yeah.
how would you call it if it's 3 people on the board?
Sure. There are sometimes I've seen these when I've reviewed 990s for small organizations, and there will be maybe 3 people on the board, and one person's the board president, and the other person is the secretary treasurer. They're wearing both hats of those particular officers, and there may be somebody else that has another officer title. And so as far as who's on that board, there's no legal requirement that there be a board of 15 people, or, I mean, I wouldn't recommend having a board of 1, but I mean, there's nothing really restricting you from being able to do that. Because, I mean, I know business owners that I work with that they've got, I mean, they're the sole owner of the company. They're a board of directors of 1 person. So it makes the board meetings really simple, but you still have to have them. So I'm not sure if that answers your question.
I do have one more question.
Yeah.
And I'm just listening to all the questions that they had. Let's say if you self-fund your nonprofit, at that point you would have to start getting public donations so that it can switch over to
A public charity.
Yeah.
Yeah, public charity versus a private charity, yes.
Okay.
So, and they actually have a client that I and one of our financial advisors at Arvest Wealth Management, it's actually one of his set of clients. They're really into horses, and they wanted to create a charitable organization to provide basically the equivalent of a rest home for horses. That either there's farm horses, race horses, didn't really matter to them, but some place where they could spend the remainder of their years not hooked to a plow or running as fast as they can to derby music. And so we actually talked with them about that very issue of, if you want to do this, if you want to not be classified as a private charity, then you're going to want to make sure that you have that ratio of at least 1/3 of your support comes from people other than just you and your husband. So that's just, and again, that's where the auditing comes in very important, and is really essential that you do that. Did you have another question, ma'am?
Well, I just wanted clarification. So in nonprofit, there's not a legal requirement of board members. In for-profit, you have to have like a president, at least treasury secretary, correct? Or
Yes.
yes, but in nonprofit, you're saying.
You do.
Okay.
You still have that same requirement. There needs to be a chair or a president of the board of directors. You still have to have officers.
Office.
Yes.
That can be 1 person, but they have to be the president or.
You need to have a president, and
President?
you need to have a secretary. That's the person who is officially legally responsible for documenting the meeting, taking the meeting notes and minutes and things of that nature. And then the treasurer is the one that handles the finances. So those
You can kind of do without a vice president.
you can do without a vice president, but you need to have at least those 3 officer positions inside of a board of directors. Yes.
Just for
Sure.
specificity.
I missed it. a president of, wait, a president?
President, treasury, secretary, they can all be one person, but you have to have 3 offices.
Yeah.
Or 3 office titles. So
Yeah.
does titles help, like,
But
Yeah,
one
three,
person is-
three officer roles. The president, the president runs the meeting.
yeah.
The secretary is the one that documents the meeting, and then the treasurer is the person, excuse me, the person that's responsible for the finances of the.
This, I'm sorry.
So, quick question, so I can utilize, the Secretary of State's website to look up corporations. Is it the same with nonprofits, so I can see boards or the franchise tax? I've never utilized that, but I was just curious.
Yes, so you can, when you go look on, if you go into Google and just Google Secretary of State Business Search,
Okay.
that will bring up not only just the Secretary website, which, I mean, even if you do that, all you have to do is just go to sosarkansas.gov, I believe is the Secretary of State website. Go on there, click on the Business Services tab, and then it's, if I remember correctly, it's Business Lookup.
Yeah, okay,
And-
and nonprofits are on there as well?
Yes.
I've only ever utilized it
For
for-profit.
yeah, but you go in there, all they do is if that corporation has filed with the Secretary of State, it will show up whether it is a not-for-profit.
Do they have to have certain titles or like
Mhm.
roles to like fill where it's like they're getting paid to do the work of the nonprofit? So
Yeah.
how is that?
Yeah, having employees of a not-for-profit is literally no different than having employees of a for-profit corporation. You know, I mentioned earlier that corporations, not-for-profit corporations that have tax-exempt status, they do not pay income taxes. If somebody gives them, classic example, somebody invested with Sam Walton in the early 70s and they've got Walmart stock that has no tax basis in it, meaning that if they were to sell any of that stock, they'd have to pay a lot of money in capital gains taxes in selling that stock. They can gift that stock to a charity that's tax exempt, and the charity sells it, they don't pay a dime. The IRS gets 0 in capital gains taxes when the charity sells those assets. That's why I work with a lot of clients that if they are philanthropically inclined and they want to support a charity, we'll go, okay, you got cash, that's great. What are some other assets that you potentially would be willing to gift to that organization, because we may be able to kill 2 birds with 1 stone. It'll help you avoid paying taxes and fulfill your philanthropic intent at the same time by making a gift of stock to a charity. So I know that's running a field of your question, but as far as, so those are taxes that a not-for-profit does not have to pay. They do have to pay employment taxes. So for example, we have to pay Social Security taxes, unemployment taxes, though, unless you're a self-employed individual, that's the other half of FICA taxes that an employer, whether it be Arvest Bank for myself or when I worked for EOA of Washington County, they had to pay that other 7.65% of the 15.2% tax. And so those are some taxes that you have to pay, but that's just handled through payroll. So to your question of, I know that's a really long-winded answer, I apologize, but really, and hiring and, if necessary, firing an employee of a not-for-profit is identical from an operational procedural standpoint as it is for a for-profit corporation. You have to have payroll, you have to have, if it's handled that way, because if they're a W-2 employee, you have to do all of their withholdings for them. You can't just cut them a check and say you take it from there. That's an independent contractor, that's a 1099 employee.
Would it be a stretch to say that the tax benefit then is more capital gain or like income? You're not double taxed or
Correct.
capital gains tax?
Yes, yeah, that's really the benefit of having the people that want to support it to be able to legally circumvent the tax structure on having to pay tax on appreciated assets. And, but all the other taxes that are out there, for the most part, you're gonna have to pay those.
That's a very interesting question. I've been thinking of that, and my Seattle girlfriend, she was thinking of starting a nonprofit. She has been a housewife. Sorry.
This is gonna be one heck of a story, I think.
But okay. She has been an artist and she becomes a housewife and then she decides. Sorry, too emotional.
That's fine, take your time. While she's gathering herself, does anybody else have any questions? Yes?
One more question to piggyback off of Pete.
Yeah.
Earlier in the presentation, you said that board members don't get paid. However, what if the owner of the nonprofit is the board member? Like, how does that work? So you can't pay yourself for working and being on the board?
If your sole involvement is in the capacity of a member of the board of directors, and that's your only legal involvement with the organization, you cannot get paid a salary. If you are on the board, but you also happen to be the executive director of that organization, you can get paid for that work.
Okay.
But as far as being on the board, getting paid, like for example, the boards of directors for like those companies I mentioned earlier, Walmart, J.B. Hunt, Tyson Foods, those are paid board positions. The people that are on those boards get paid a salary for serving on the board. But for a not-for-profit, they want to avoid that because that can lead to all sorts of bad stuff. And so they just said, you know what, if you serve on a board, you're a volunteer. But you can, if you were wearing those two hats, you're wearing the board hat, but you're also wearing an employee of the organization hat, that's the hat where you can get paid.
Is there a proportionality rule? Like my understanding with for-profit is that there's so many, how your time, or is there any kind of hint in any IRS, like a proportionality of time or something?
There is actually. It actually is in the breakdown for the 990s. It will actually list on there how much of the person's time for a person who happens to be serving on the board, but is also an employee of the organization. There will be an actual numeric breakdown of hours per pay period or per week. So it'll say this person spent 39 hours of their day, of their week, working as the executive director,
Capacity, yeah.
and they spent 1 hour a week serving as a member of the board of directors, and then we'll list their salary. The salary is tied to their work as an employee, not on the board.
Gotcha.
Is that why a lot of times you see the founders of a nonprofit, they're just the executive directors a lot of times, and then they have like the board kind of to hold them accountable and keep things running, or is that, okay?
It can be, absolutely. That is a very common reason why you will see that.
Okay, and actually those questions related to my question, I'm sorry.
You're fine.
It's maybe 3 life generation also emotional. And my good friend is part of me, and she wants to have a nonprofit. She wants to have the salary. Now can she get this? And paid by hours. So sorry.
Mm-hmm.
Actually, I think she wants to devote her life to this whole charity thing.
Right.
And by hours, you know, me too, and me too. I love social activities, volunteering, but I'm bored of, fed up with free services. Free services, my family, free services, my community, free services. Then I need a good salary also. You know, all my life, more than 8 hours a day. We want to devote our life to do this kind of things. How can we get the salary, not break law? And we don't have money to hire a lawyer to tell us this kind of things. I've been trying to start a nonprofit all years, and I always get stuck by finding a lawyer to tell me how to do this kind of things. And I've been to all kinds of nonprofit meetings and this and that, and this question has never been solved. So I've been hesitating to do this, and I don't want to be in prison because of this kind of thing.
Sure.
And nobody really answered this question.
Yeah.
Thank you so much.
Yeah.
I'm sorry. As a woman's life, and actually see most of the year, only one guy.
Yeah.
And also I'm laughing because my friend said, can I raise money?
You can't raise money and then split it with her. And just doing that, you have to have an actual framework. You actually have to have that's putting the cart in front of the horse. You have to have the corporation, you have to have the mission, you have to have that all in place and have the tax exempt status before you're able to do that. To your question on what are the appropriate amounts? What are thresholds that are going to be okay? And when are you pushing the envelope? When are you clearly violating the law? There's a great resource on the second floor of the Fayetteville Public Library. It's called the Nonprofit Resource Center. They have dedicated staff up there that can help guide you through that process. They have access to databases that I'm actually also a member of the Association of Fundraising Professionals. I've been part of that group for almost 20 years. It's a great organization, and that was something that my chapter has sponsored now since we started that almost 16 years ago. And so that is a free service. I need to mention no free services. Well, this is a free informational service where you can go up there and you can look and do some queries of, okay, for this type of organization of this size, what is the average salary that somebody makes? You can do that research, and that's all available for you on the second floor of this building.
Thank you. Yes, I know the university has a free law, but they close it. And yeah, I will go there. Thank you so much.
Yeah.
I cannot stop
How can we
laughing.
make money for nonprofits? I mean, aside from, like having events or like doing different fundraising campaigns, or
Yeah.
how do we find the rich people that want to fund our thing? Can you hook us up?
Yeah. Into the community. Those are your people that are your boots on the ground in the community that can actually help you and assist you with communicating the good work that you're wanting to accomplish out in the community. It's a long fuse to do a not-for-profit the right way. It's not something, unless you've got a very generous, financially deep-pocketed benefactor, it's not something that you get the paperwork signed, you sign some paperwork, and you're rocking and rolling the next day. It's something that takes time. I know multiple people that have started charities, and they devoted their own time to it, in some cases for months, if not years, while they were working their other job until it reached that critical mass point where they were able to leave their other job, their for-profit job, to then work exclusively supporting their nonprofit passion and be able to do it where they're financially able to make ends meet. And so that is something that it's really just going to depend on a case-by-case basis. But as far as going out and what are the most effective ways to go about raising funds, trying to gain support, I think that one of the things that you would be really good to start with, I can't remember who it was that had said this earlier, but talked about grants from foundations. There are some grants, and this is also where going up and researching at the Nonprofit Resource Center, they have access to a license, at least I think they still have access to it, called Foundation Center. Okay, and so that is a database, that is a national database that will actually list grant-making organizations, and some of those have very narrow requirements on what they will permit to their grants to be made out to. Others will, it's like, you know what, if you get yourself started and you align with our mission and our organization of what we'd like to support, we may give you a 1 or a 2 or a 3-year grant to get your not-for-profit off the ground. So it just depends. But yeah, there's a lot of research. I'm not going to sugarcoat it for you. I mean, there's fundraising and working in not-for-profit. Another good friend and mentor of mine, he described it as a ministry. And it's something that you're not just doing it because you want a paycheck You're doing it because you feel down to your very fiber of your being that you have a great deal of passion and drive to accomplish X, whatever X may be for you. I know, for example, myself, going back to my days of nonprofit fundraising for EOA, the overarching mission of Economic Opportunity Agency of Washington County is to eliminate poverty by educating and empowering people who are living with low incomes to become economically self-sufficient. You borrow from the biblical parable, we taught people how to fish as opposed to handing fish out. That resonated with my personal value system. With Children's House specifically, and it wasn't really hard for me to get passionate about that when you're looking at kids that are this tall that have had unspeakable things done to them and know that you are having a direct personal, and I still get emotional talking about it today, having a direct impact on changing the trajectory of their lives forever. And having them have the potential to grow up, that God-given potential to grow up to become a parent themselves one day who will not abuse their own children, and thereby we have broken the cycle of child abuse, hopefully permanently, for that family forever, that maybe goes back for generations. That's something that I was passionate about. That's something that got me excited and want me to put my clothes on and go to work every day. That being said, passion doesn't keep a roof over your head. Doesn't pay your bills, doesn't keep the lights on, doesn't put food in your fridge. That's where going and finding out where can you get that flywheel initially spinning. And foundations, I think, are a great place to start with that process. Grassroots fundraising, that's going to be a really tough lift, even in an area that is as philanthropic and from a philanthropic standpoint is as affluent as Northwest Arkansas is. That would be a really tough climb. I'm not saying it's impossible, but I would say it would be pretty challenging. But if you're able to get some seed money from a grant-making organization like a foundation, that would be, I think, a really good place to start.
Is that considered private funding or?
That's public funding.
It would be public, okay.
That's public funding.
I was confused
Yeah.
by that, okay.
Yeah, that where you run into the private foundation, private charity conundrum is, say I've got more money than I know what to do with, and I want to start a charity, and I want to help abused kids, and I want to do it in this way, different from the way Children's House is doing it. I set up my own organization, and I am the sole funder of that organization. That's going to be a private charity. So that's really where you run into that type of I mean, it's one of those things where I can't perfectly describe it to you right now, but it's one of those things where you know it when you see it.
Yeah. And the passion drive you to do the activities, then through the activities, you will meet the people. You will encounter who is interested. Yeah. And I have two more questions. If you
Okay,
quickly.
two more, and then I want to be respectful of everyone's time tonight.
One is-
I mean, a for-profit company can receive sponsorships. They just don't get a tax deduction for getting or receiving them.
Can receive.
Yeah,
can accept.
yeah. I know. I mean, perfect example would be. Look at NASCAR. NASCAR drivers, they got logos plastered all over their suits and all over their cars. I mean, they're not working for free, and those are sponsorships. But when those organizations make those gifts to that organization, unless they're tax exempt, the people that are sponsoring them don't get a gift. For example, like Tiger Woods. Was sponsored by Nike for years. I mean, he's a for-profit. He's a pro player. When Nike was sponsoring him, they weren't sponsoring him for the tax deduction. They were sponsoring him to attach their Nike swoosh to him, because then when kids saw him playing and adults saw him playing, they're like, I want the same clubs that Tiger Woods has got that Nike makes. I want the same outfit that he's got on that Nike makes. He's got the same shoes. I want the shoes that he's got that Nike makes. That's why a for-profit company sponsors another one, or a for-profit entity. They're doing it for marketing.
Actually, only no exceptions, huh?
No exceptions.
Yes. And another one, can a nonprofit becomes a for-profit?
Yeah, that's good. Going back to that whole IPO. I mean, if a tax-exempt organization decided to, I've never heard of this happening. I'm not saying it's never happened, but if a tax-exempt organization were to relinquish their tax-exempt status and apply to the Secretary of State and say, we no longer wish to be classified as a not-for-profit corporation, we wish to be classified as a C Corp, and have to start paying taxes, I don't think that there's any legal process that precludes them from being able to do that. I've just never seen it happen in reality.
You wouldn't have to dissolve it and give away their stuff and start from scratch as a for-profit?
The assets you'd have to give
That's
away.
what, okay, that's what I was,
It
yeah.
depends on the situation,
Yeah.
based on the contract.
Yeah,
the
and I mean, the only way to, if you were, say, you're a hospital and you wanted to become a for-profit hospital, you'd have to create another entity that would have to have the cash to buy the assets of the not-for-profit.
Oh, what if there's no money to buy the nonprofit, but it has the capacity to run the nonprofit? Nonprofit is not running very well. A new profit can help the nonprofit run, but change the entity nature. There's no.
I don't know.
I'm learning.
You're describing a fact pattern that I've never seen in reality, so I really can't answer the question.
Thank you. Yes, I am. I'm a nerd. Thank you so much.
Sure, you bet. Well, 1/4 time, I wanted to try and start on time, end on time. I know it's an evening and people have got things that they got to do, so thank you all very much for your time.
Thank you.
Appreciate it, and appreciate you being here.
Thank you.
Thank you.